Actually, you'll have to first understand that why the selling has happened. And there are multiple factors which essentially are, in a sense, causing this kind of shakeout. First, it really has to be this confusion on the medical front. There is a lot of back and forth which is coming from on the medical front in terms of how the new virus is spreading and how effective the vaccines are. Markets were not anticipating that, and since markets were not anticipating that, that in a sense is giving this a reason for equity in general, equity markets to sell off, and it is turning out to be a risk off moment, not for equity markets but for other asset classes as well. Then the central bank comments, which in a sense are not hawkish but super hawkish, and they are clearly pointing to the fact that interest rates are headed higher. I don't think markets were prepared for 3 rate hikes. Third, this sell India, long China, a trade which global and domestic brokerages in a sense are advocating to their clients, because it's, according to brokerages, India is at the top of the heap. It is time to book some profits. China is at the bottom of the heap. It is time to do some bottom fishing or value buying there. That in a sense is also largely responsible for the kind of ETF outflows we've seen, where you can look at the screen and you can identify that, look, this is pure macro money which in a sense is moving out of India and perhaps is moving back to China. So these are the three interplays which I think are at play. But the bigger question is, what do you do? And I go back to that point which we've discussed. Do your homework. Get your buy, sell and hold list ready. If that list is identified, all you need to do is that if stocks are reaching your price point, you need to buy them. There are some stocks where you may see correction, but just because markets have corrected, they do not qualify as a sell. And there are some stocks where you need to sell them because whether it's a discomfort on valuation or whether it is a discomfort on what is happening in terms of the underlying economic growth, then you have to sell them. We'll talk about some of these sectors, but the basic strategy has to be that you'll have to identify your spots, define your time horizon. If you're in SIP investor, nothing changes in your life. If you're a momentum trader, well, lot changes in your life because the market is reversing. So depending on what your approach is, you'll find the right answer. The universal trade for 2021 has been buy the decline and stay invested. That universal trade has worked for a trader, for a SIP investor and for a long-term investor. Now it's different. The trader will have to approach this market differently. There are long and short opportunities. Investor will have to work on their buy, sell and hold list. And if a SIP investor, trust me, nothing changes.